Hey everyone, this is June from Turning Point Life Investment, and this is your market analysis for May 1st, 2010. Let's start with the SPY 5-year weekly view. So we pulled in another bearish reversal candlestick, just kind of like what we saw 3 weeks ago or a couple of weeks ago. We had a doji, but the main thing about these candlesticks is that we never had any sort of follow through, meaning that prices were unable to close underneath this candlestick. So even though we have a bearish engulfing pattern this week, prices still need to close underneath it to give us a better confirmation that sellers are coming back into the market. But I still consider this to be a pretty significant reversal bearish candlestick because, well, we have two in a row, and given that the weekly stochastic is overbought and MACD divergence is showing some pretty decent divergence on a weekly view. And if you look at how prices are far away from the moving average, just kind of like how it was before, it does need to pull back to kind of retest and retouch this 20-week moving average, and I suspect that there's a very good chance that they will do so. Okay, going into a daily view. Now the first pattern that pops out in front of me is that we have a potential head and shoulders that's forming. We have a left shoulder ahead, and this week we grinded out a right shoulder. Okay, but the main thing that still needs to happen is a break underneath this neckline. So that's somewhere around the 118 level. Okay, so not until this breaks, just kind of like the same thing as confirmation with the weekly candlesticks, not until support breaks can we say that this is a very good indeed bearish head and shoulders pattern. The first target, I think the first obvious target, and I'm sure a lot of people are also aiming for this place, is 1115. I would definitely shoot for this level as your first bearish target, first level of support for this market if we do get that bigger pullback. Okay, next let's turn our attention to the VIX. Now sentiment wise, it's telling us that volatility is creeping in back to the market, and whenever you have increased volatility, that's a pretty bearish sign because bullishness is marked by very low volatile markets, whereas bearish markets are marked by fast volatile markets. And so the VIX is telling us that volatility is coming back in. And I mentioned before in my previous videos that whenever you get a very low VIX, that usually indicates some pretty extreme bullish sentiment. And whenever sentiment is too extreme to any one side, that tells us it's near some kind of a top. And you can kind of see when the market was making new highs, the VIX failed to make new lows, and that was some pretty major divergence right there as well. Overall, just to recap, that level to watch for is the 118 level. If that breaks, then again I suspect a nice pullback back towards 115, and that's actually a trade you can do yourself where you can set a trigger right around the 118. If it breaks, then you can buy some SPY puts and aim for a $3 target right around the 115 area.